the AI hype cycle has swept the nation this year. Talks of artificial intelligence have dominated earnings calls as more C-suite executives are looking to use this advanced technology to build out their company's growth plans. JP Morgan Chase CEO Jamie Dimon is no different. The exec is bullish on the benefits of AI. In an interview last month, Dimon said he believes a 3.5-day work week will take place for the next generation, all thanks to AI. Our next guest says Jamie Dimon has a very positive and accurate view on the future opportunities and probable outcome surrounding AI. I'm joined by Sultan Meghji, former Federal Deposit Insurance Corporation's Chief Innovation Officer and Professor and Venture Capitalist at Duke University. Good to have you back on the show. So, Sultan, what is giving you so much confidence about some of these projections that we heard there from Dimon?
Well, the most interesting thing about what Jamie Dimon has been saying is that he's fundamentally correct. And we're seeing it in the market. We're seeing significant productivity improvements just in the last 3 to 6 months. And it's really unlike anything else we've seen. And he's a fantastic economist, as we know. Overall, the strength in the US economy is being bolstered by these unbelievable productivity improvements. And I think the question is just how long will it take for them to spread across the rest of the market?
And with that in mind, then, in terms of where the strength of the US economy is and the potential for, AI to disrupt things, what does that do then to the inflation picture?
It's a really interesting question, and I don't think any of us have a great answer. There aren't a lot of disinflationary signals currently right now, and there's a lot of concern about what the rest of the fourth quarter and first quarter of next year might look like. But the reality is there are a lot of companies out there that are investing tremendous amounts of money in AI, mostly for efficiency, mostly to streamline back office processes or automate jobs that were previously done by other people. And if you have an environment where a company of 10 people can operate as effectively as a company of 100 or 1,000, there will absolutely be some pressure on the overall US economy.
And Sultan, I want to get your take on this quick clip. We had an exclusive interview with Yahoo Finance. Our executive editor, Brian Sozzi, sat down with Jamie Dimon to discuss why the Inflation Reduction Act and the CHIPS Act shows promise for the US economy. Let's listen.
You also have commitments that are being made. The IRA Act, the CHIPS Act, the green economy, we think will eventually cost $4 trillion. I hope it's well spent, though I suspect a lot of it will not be well spent. In Europe, when oil and gas prices went way up, they basically financed it for all consumers and producers. So government, and then we have aging populations, Social Security, Medicare.
There's a lot of concerns.
But there are a lot of things which I say are future inflationary. Mm-hmm. I don't see anything which is future disinflationary.
And that speaks to what we were just discussing there. In terms of what we're seeing in terms of disinflationary signals, other than a potential recession, how should investors and companies be preparing for this? What sort of investments should they be making?
It's a fantastic question. And I'm not an official investment advisor, so take everything I'm about to say with a grain of salt. But I don't see anything fundamentally altering the inflation picture, the rate picture, or frankly, a lot of the jobs pictures, except for things like artificial intelligence. So instead of thinking that we're going to be out of this with quotes around it 6, 12 months from now or coming out of the next presidential election, we should probably start considering that this is the new normal and that the kinds of disruptions we're seeing, the kind of energy in the overall market could be just like this for the next 5 years.
And so which sorts of companies do you think would be most exciting for investors as we look at this transition to a lot more AI dominance and sort of AI filtering its way into our everyday lives from how we work, the sort of cars that we drive as well?
Absolutely. One of the most interesting things right now is that out of the recent banking crisis, so much of the tech venture capital ecosystem has been disrupted. And so instead of seeing a lot of private companies go through the IPO path or go down the acquisition path by larger public companies, a tremendous number of very interesting artificial intelligence companies are private and probably will stay private for quite a while. And so if I'm evaluating the public markets, I'm looking for companies that are fundamentally investing significant capital into artificial intelligence and other automation so that they can be more competitive over the longer haul. Separately, I'm looking at a lot of private companies, private investment opportunities that are fundamentally focused on small, nimble, agile firms, in essence, taking out big legacy competitors. If you have an investment in your portfolio and their fundamental technology stack is, let's say, 2 years older than your iPhone, you're probably, you need to think about whether that's a good investment.
So with that in mind, then, are we expecting something of a shakeout for a lot of these companies that sort of touted AI in their earnings calls and was sort of that the part of their sales pitch? But a lot of people, investors at this point, looking for people to show and prove how they're actually going to be using this technology. Are we expecting much of a shakeout? What do you think it might look like?
It's a great question. I actually am not sure there's going to be a huge shakeout. One of the things that a lot of big organizations have is they have sticky sales. They have multi-year contracts, they have long-term supply chain, infrastructures. What I'm most interested in seeing is, are they adjusting to be a more digital, more ad hoc workforce and delivery? And are they actually creating value out of these investments? Just because I see a press release with AI, that doesn't actually mean anything. Are they fundamentally doing something to their bottom line? That's the thing that gets me interested.